Boris, thank you so much for joining. It's always a pleasure to connect with you. Good excuse to do it on this podcast here, but yeah, thank you so much for coming on.
Thanks, Matt, for having me. It's the first time I do a podcast. I'm a bit
Oh,
nervous. I don't
oh,
like I don't like publicity.
first time. Wow, I'm grateful to be ushering that in, and I've done like 30 podcasts now or something with this one, and it's fake it till you make it. There's really nothing to it. It's just talking.
Yeah, yeah.
But Boris, I just love what you're doing with Soundcheck Capital. I think it's a really important and interesting model into the future with how ticketing deals work, how venues can get funding, and we're gonna get into all that. But before we do, why don't you give us your background and your history of how you got into Soundcheck Capital, your time at See Tickets, and then we'll talk about what Soundcheck Capital is.
Yeah. So basically, quickly, my background, I spent 15 years in tech management consulting and M&A. So consulting, strategy, merger and acquisition, technology in media entertainment. And in 2014, I was part of a big company in France called Vivendi, and I'm big in media entertainment. They used to own Universal Music, Activision Blizzard, and so I was working on the M&A team. And I was on the board of See Tickets, a ticketing company out of the UK and France. And I moved to the US to launch the US business of See Tickets, end of 2014. I started out of Capitol Records, Capitol Building in Hollywood. No, Universal Music was a sister company. And I basically launched See Tickets in the US. I stayed there for 10 years. We became a very strong independent players in the independent music space. Great team, great company. I left 2 years ago when the company was sold to CTS Event Team. And during those 10 years, 11 years at City Tickets, I got to know and learn about the independent music industry, and we served so many independent music promoters and venues that I realized that no, I was spending more time discussing financing than discussing ticketing, technology, service, and marketing. And so, all along those years at Citikids, I was thinking we're a bank, and it's no secret that a lot of ticketing companies in the US and even in Europe do signing and bonus and advance. And when I left Citikids, I felt like rather than start a new ticketing company, I'm going to start a fund that finance independent promoters, and I'm going to separate the ticketing from the financing. And that's how I no, that's how I started Soundcheck. It was just a very simple idea of what I had been doing for 10 years with C Tickets, with the technology, service, and
Hmm.
marketing, of course. But we had been financing promoters for many years.
Yeah,
And
and oh, go ahead, please. Yeah, yeah.
yeah, and look, we were serving, more than 500 independent promoters, especially post-COVID. C Tickets was very strong with all the indies because we were the first to support NIVA even before NIVA was started. We and I literally wrote the first check, in April 2020. So we've been very involved with the indie music community, supporting it, supporting NIVA. I'm on the advisory board of NIVA with a lot of great folks, and that understanding of the industry and discussing with promoter, doing ticketing deals, led me to basically start Soundcheck 2 years ago. It's been
Y-
2 years.
Yeah, and I'm fascinated to deep dive on Soundcheck. But before we do, I want to kind of pick your brain a little bit about the C ticket story. So obviously, yeah, you were involved with C tickets before it came to the US, and then you came to the US. Like, what would you say the difference is between ticketing in Europe versus ticketing in the US? Like the most meaningful ways that they're different. Yeah.
Two things. One, um, this is less of an exclusive market in Europe than it is in the US. In the US, you have exclusive ticketing deals for promoters, venues, festivals, tours in mostly venues and promoters. In Europe, you can have two or three different ticketing companies selling for the same show, and they have different ways to do it. In the UK, they share a location. In France, I think they have like a middleware where everybody can pull inventory from. There's different ways to do it. It's just one of the big difference. Primary. It's basically exclusive deal versus non-exclusive. Um, and
Or
then the
please go ahead. Please, yeah, finish up.
and then the second thing, the secondary market is not as big as it is in the US.
That's what I was gonna ask you is if that model of not having a single primary basically does that destroy the secondary? But yeah, please go. I was literally gonna
I
ask you
don't
that.
think so. I don't think so because I still think some people are gonna, legit fans are gonna buy tickets and something is gonna happen and they can't go to the show and they need to resell it. So there's value in the secondary from that standpoint. I'm definitely anti, brokers that makes the most of this and extract value from the industry. But for the fans, I mean, it's a good. You got to have that alternative because shit happens. You can't go to the show. You want to resell your tickets. And but the way it works in Europe, at See Tickets we had that in the UK. We were offering and in France as well an official marketplace or resale with the fee capped and so this was all managed in good standing and good spirit and good intelligence with the promoters, the venue, and the artists. Okay, so it was much more control. The US is the wild, wild west. It's just the way it is. It's just the way business is in the US versus Europe, where there's a lot more regulation. There's a lot more things happening. When you see what's going on with the European commissions, always finding the US companies, the big tech, because of the data and GDPR and all this. This is all coming from Europe. In the US, there's a lot more freedom to do what you want.
So secondary exists in Europe, but it's not as kind of like running wild and rampant is what you're saying.
It's still it is, but not to the same level of
Interesting.
business. And then I think what drives me crazy is that it's not that part that drives me crazy. Is that what I think is crazy is that some people would rather. I've heard friends, they went to see with their daughters. They went to see Taylor Swift. They live in Miami. They went to Europe because it was cheaper to book a flight, get an hotel, get a ticket for a show over there than have it in Miami or in the US.
Wow.
And that's real. I mean, there's stories of that.
Now, is that a demand question for T Taylor Swift in Europe or
No,
like
it's a pricing question. Everything is more
yeah.
expensive.
Huh.
Everything is more expensive in the US, but it's just general. It's not just ticketing. It's overall.
Interesting. Interesting.
And the fees are higher for ticketing in the US versus Europe as well, and for different reasons. But those are
So
the big differences, I think, between the markets.
yeah, that's
And
really
again, I'm spent most of my time at See Tickets. I was the CEO of the US business. I was the CEO of the global business
mhm.
for a year or two, but my knowledge is mostly on the US market.
Okay. Yeah.
So one piece of one anecdote in France for many years, the the main ticketing company was a retailer called Fnac, and their whole purpose was not to make money on ticketing, but to use ticketing and selling concerts to drive people to their store. So their fees would be super low, and so the market had very low fees for many years because of this. So every market has a different history.
Wow. And in NAC is like a physical store or it's on an online store?
Fnac, it's physical. It became online, and now
Okay.
they're the largest ticketing player. And but it's there is a the
And
US is one.
do they still keep their fees low?
I think it had an impact on the overall market And even though the Ticketmaster came in, CTS event team bought Fnac, and the level of
Mm.
fees is increasing, um, because of that. But it's still much lower than in the US.
Super, super interesting.
Yeah,
I'm when I hear that, I mean, Europe is there's obviously tremendous differences between the Europe and America, but it's only a flight away. And when, it's in the secondary marketing is such a problem in the US and in the Europe, our neighbors over the ocean there, it's not as much of a problem that makes me kind of like want to put my thinking cap on and just like list out the 4 or 5 reasons why that is. But I think,
regulation is
yeah, it's
probably.
regulation. Interesting.
I mean,
And then folks could kind of ask themselves a question in the US, which I think is constantly being asked is the pro worth the con? So with tremendous amounts more regulation, you could reel some of these things in, but at the same time, that's a lot of the criticism that folks have when when they're doing business in Europe and with and on the tech side of things, just the data compliance and GDPR and all that and SOC 2 and but at the same time, like it does help kind of reel in some of these things like secondary ticketing. So that's a curious discussion on trade-off is like what would people prefer,
yeah, yeah, totally. I'm gonna move a bit here. Okay,
Oh, no problem. Well, just to kind of keep going on primary there for a sec, or sorry, Europe there for a second. Do you the fact that venues, promoters, festivals, arenas, they don't have a single primary ticketing, they can sell on multiple primary. Does that mean there's not like these kind of upfront contracts and upfront checks? Like how is it different in regards to, like why does a one music venue post on Eventum and NAC and Dice or something like that, versus, choose one? Like how does the whole like kind of model and structure work? Yeah.
I think there's less money upfront, much less, because less exclusivity, but there's still some money upfront. I can't tell you if it's like 10 times more or 5 times more, but it's less of a cash upfront market. But it exists. Look, it exists, and it's been existing in the US for I don't know, 20, 30, 40 years. I'm not the one who invented this. When I arrived with See Tickets in the US, I realized that, as a ticketing company in the music space, this is part of the business, you know.
Yep. Yeah. Why don't we go into that for a second? Can you spend a little bit of time on the founding story of See Tickets U.S.? Like, how did you guys get that off the ground? Like, what was your day one? What was the idea? What was like the day one early execution? How did you get your first 10, 20 clients signed up? Like, what were the challenges? Like, let's spend a little bit of time there.
Yes. Look, the See Tickets, the UK business was already operating and selling tickets in the US from the UK back in 2014. They were doing mostly artist pre-sale. So I don't know if you remember back in the days, there were crowd search who got acquired by Songkick, and there were a lot of platforms like Music Today that were doing artist pre-sale, basically packaging pre-sale ticket with merch, with music, with records and all this. And so that was driven by the labels, okay? And so what we did is when I launched, and I moved to the US, I just looked at it and say, okay, our sister company is Universal Music. We're gonna get access to all of their artists, and we're gonna get 10% of allocation and do all the artist pre-sales for 40% of the market. So that was the business plan for the US. Basically, Universal Music at the time, more or less as 30 to 40% of the market share. We're going to get 10% of the artist pre-sale. We're going to capture 3 to 4% of the US market. It's big, and that was the business plan. And then I come in and I start discussing with the label, with the artist, and trying to take tickets off platform, from promoters and venues. And that's when I realized that artist pre-sale was not that easy, and you had to negotiate with all the promoters, all the venues, not just the artists. So we did that for a year and a half. Okay, not a great business, not very scalable. And then in 2016, you know, um, we acquired Flavors out of bankruptcy. So Flavors was a ticketing platform focused on festival. They used to do all the Insomniac events and EDC and all this. We bought them and really used that to develop the business. We acquired a good platform, great people as part of the deal. And, we're small teams and we grew much larger thanks to that. And then based on this, we developed into music festival, music venues, and supported NIVA, the foundation of NIVA, during COVID, and that's how we grew See Tickets in the U.S. It's just getting on the ground, meeting people, understanding their needs, and acquiring one business and this.
So in 2016, you buy Flavorist. How long did it take? And then there was some under the hood product work to kind of rebrand it and customize
Yeah.
it for venues. So when was the first venue that you had outside of whoever you inherited from Flavorist? What year and who was it? The very first one, yeah.
I would say it was probably around 2018.
Okay.
So we bought Flavors in 2016. They had a few venues. They had a lot of festival. I know we must have signed some venues in 2017. I don't
Okay.
remember which was the first one, but no, the big thing for us, and we were growing every year, 30 or 40%. So and we had a good platform, good team, and very strong, supporting the industry. And then we were writing checks, signing
Hmm.
bonus in advance, and that's when I realized that we this was necessary.
Was
And
was that a that's what I was going to ask, coming from Europe where the kind of the money is not as pertinent upfront. You can choose multiple primaries. One of the things that you and I have talked about is just how interesting the US market is and how much that contract check drives decisions for the venues on who they're going with. Was that surprising to witness at first? And like, what was it like early days when you went from, not writing the checks to writing the checks and learning how aggressive some promoters were in their asks?
yeah, I was not doing ticketing when I was in Europe. I was on the board of See Tickets, but I was not operating it. And And my background had been in media entertainment, doing big projects for big companies and merger and acquisition for big companies. And so when I started in ticketing at See Tickets in LA, I was doing artist presale, then festival, then venue after the acquisition of Flavors. For me, it's not like I was comparing to Europe. I was comparing to the rest of the media landscape. And for me, it was not a problem. It was part of the business model, putting money up front. It's ticketing rights. It's the same thing than media rights. It's the same thing than sports rights. Today, you wouldn't have a CBS, ABC, or get the NFL rights without paying. It's the exact same thing. And so that's why rather than be shy about it and say, oh no, we can't do it. We only need to win on tech and best platform. I felt like, well, this is the exact same thing than in the media industry. The platform, the streaming platform, they put upfront money. The labels on the record side, they put upfront money. Minimum guarantee to artists. It's the exact same thing. It's the distributor financing the content creator. You look at Netflix.
Yep.
You look at record labels, Universal. You look at broadcaster with the NFL. It's
Do
the
you
way it
think?
works.
Oh, yeah, absolutely. Do you think that, just to ask a couple like pressing questions, and to do my job as a podcaster, do you think that there's, some some perverse incentives that get created from like the way that ticketing companies can, like, for instance, like See Tickets had the backing of Vivendi, so could think kind of like more long term about the checks that they would write and winning the business and being more strategic, whereas like a smaller tech company in the U.S. without the backing of a big conglomerate like couldn't write a check. Like, do you think that it creates some
Yeah, yeah. I
interesting
mean,
market
totally. Look,
dynamics? Yeah, yeah,
obviously, Vivendi at the time when I moved to the US was a $30 billion market cap company, and
yeah.
that helped, of course. When you're a startup, you've built a great product, and you pitch a promoter, and he wants 100K up front because the other ticketing companies are offering it. Of course, it's challenging, which is also why I started Soundcheck. It's not.
Yeah.
I mean, it supports the promoter, but it also supports the ticketing companies. We partner with them. Okay, it's just we're separating the two. The financing needs to be part of it's necessary
Yep.
because the reality is, banks are not financing the industry. Okay, it's just the reality. They don't know how to do it. They don't like it. There's no real asset that they can collateralize like a real estate.
Yeah.
Um, there's no the two reasons why they don't finance, in my opinion, is one, there's no real estate or a very strong asset that they can understand and have as a collateral, and two, the revenues are not it's not subscription revenue like a cell phone company or Netflix. It's
Yeah. Yep.
very hit or miss. One month is going to be big, another month is going to be not big, and so that's why traditional banks don't finance this.
Yeah. So if you will, let me zoom out. Let's jump into Soundcheck, and I think you already started segueing into it. So you have this incredible experience being on the board in See Tickets in Europe, starting See Tickets in the U.S., building an incredible business. Who, by the way, has been very very helpful to Prism. We're deeply appreciative for y'all. I think you were one of the first ones to integrate with us, which has been incredible. And I hope that it was mutually beneficial both
I
ways.
love
But
Prism. I love Prism. I'm a big fan. I'm a big fan of the
thank
feature.
you.
I told you about the feature you released last year, like
Oh,
Insight.
insights, yeah.
I love it. I think it's genius. I love it.
Thank you so much. Thank you so much. And we can talk a little bit more about that in a bit. Let's keep it on sound check though. So you had this incredible experience. You scaled seat tickets. You realized that funding is a part of it. It makes a lot of sense. There's comparisons to the other industries, but at the same time, your seat ticket sells. You can do anything that you want. The world is your oyster, and you decide. There was while it's necessary for the industry, there's ways where if you were to separate the tech from the funding, that there could be a business opportunity there. So let's get into the founding of Soundcheck, and why did you come to that conclusion? And you also just kind of brought up some really good points about how banks don't traditionally lend to venues, and that probably creates this cycle of ticketing companies being seen as a lender. So let's just jump right in. Like, what's the initial idea for Soundcheck, and what problems were you responding to with the existing model that you thought Soundcheck was what needed to exist?
So I had that idea in 2018 already. Okay. And so I started when I was at C Tickets to look at different financing options and all this. I was lucky enough, and we were supported by Vivendi and by C Tickets in Europe. But I was looking at, okay, what if the funding dries? Okay, what are my options? And there was no option. And so I felt, as a ticketing company, as a CEO of C Tickets, I would want to have a financing partner to do those deals. And that's how I really thought about it. And then I thought about the promoter, and I thought, okay, well, as a promoter, I would want to have the options to separate the two and have the ticketing decision made on technology, service, people, marketing, integration with different platforms, including Prism and all this, and have the financing decision being separated. And that's how I came. That's how I got the idea of Soundcheck, and that's why I created Soundcheck.
Got it. Got it. So what's your model? How does it work for venues? And yeah, so if I'm running a venue and I'm interested in working with you, like give me the soup to nuts kind of pitch on how it
Yeah,
works.
and look, I think, and before I would talk about the Soundcheck model. I think ticketing companies have been doing it for years, and they've been really doing a service to the industry. Okay. I
Absolutely.
mean,
Absolutely. Yeah.
there's a reason why the promoter took those checks, is that they needed the money to pay the artist deposit. And so I think ticketing company, exclusive deals. If you're going to put $100,000 or $1 million, you want to make sure that you're going to be in business with that partner for many years. That's normal. That's normal business. So um, I have a lot of respect for what the ticketing companies do on this, and I'm not against the exclusive deals or anything like that. What I think we provide is different. Okay, it's we we're much more here to support them. A ticketing company will do a 5-year deal with a lot of money, and then you have a need for because you got the big check at the beginning of the deal, but you have some financing need because you have the opportunity to book an artist for a show, but you don't have the cash. That's where we can come in. We don't do long-term deals like ticketing companies. We do, we support events, we support venues, we support festivals, but we're not engaging in a very long-term relationship. And that's a very transparent and flexible relationship. So the way we work is, it's very simple. We make an advance and we recoup based on ticket sales plus our margin. Okay. And that's how we operate. So basically, for the promoter, it's very interesting because first, it's not an equity investment, so we don't make any decision. We don't take equity. We don't control. We don't decide who you should book or not. Okay, it's not a loan where you have to repay the same amount every month with the interest. Okay, it's basically an advance that you repay based on your ticket sales. So if 1 month is slow, you repay less. If 1 month is big, you repay more. So it really adapts to your business. Okay. So that's why promoters love it. It's totally adapted to the business. Number one, it's very transparent. Okay, so you get an advance. In advance, so you get like let's say $100,000, and then you've got the fees. So you get $100,000. You're going to repay 110, for example. You know exactly that you're going to repay 110. The only thing you don't know, and I don't know either, is how long it's going to take to repay because it depends on the ticket sales. But if you, for
Is there a
example, if
maximum? Like, can they, like, presumably they couldn't take 10 years to pay it back or something when you get it, or yeah, how does it
the
work?
way
Yeah.
we look at it is we try, so for example, for a festival, now we want to recoup within 3 to 9 months. But sometimes we do so we serve a lot of Latin promoters, for example. We work with a lot of Latin promoters, and they come to us and they need money for artist deposit for a show that's going to happen in a month. Okay, so we finance them. We work with venues, and they want money, and it's going to take more time to recoup because it's going to recoup over 6, 9 months. We work with festivals that need money just for the artist deposits, and so we provide the financing and we recoup based on ticket sales. It's no, we do some estimates, of course, of how long it's going to recoup. We have
Yeah.
we have underwriting, pricing. We have a full system to make sure we do deals, and there's people we don't finance as well. But there's the really for the promoter is that the benefit is again number one, it's available. Okay. Bank financing is not available. Number two, it's transparent. So they know exactly how much they get and how much they're going to pay. Okay. And number three, it's flexible. It goes with their ticket sales. Okay. And we charge the fees we charge. It's always very straightforward at the beginning. So if they sell twice as many tickets, we're not getting double our fees. We get the same fees. Okay, so it's more of it's very transparent. You get 100 and you repay 110, and that's it. If you sell $10 million worth of tickets while you were planning 5 million, you're still gonna pay only 110.
Hmm.
Does that make sense?
It does. Is it always 10% or is it dependent
No,
on
no,
the
it
it
depends.
depends. Okay. On
I'm
the
just
time
giving you
on the
some.
payback time. Yeah, like if it's a 3 month loan, presumably, 10% annualized turns into quite a high interest rate. But if they're gonna pay over, 11 months, then it's, obviously quite different. Yeah.
It's not a loan. Okay, it's not a loan
Right.
again. Okay, it's not a loan. It's an advance, and we recoup when they sell tickets. Okay.
Right. I get that, but from the venue's perspective, if I was doing that, I would kind of calculate it as like a loan. Like I'm taking the money up front and then I'm going to pay it back at a certain point with a certain interest rate. I would kind of compare that to if I took out a mortgage over a certain period of time and what the interest rate is and whatnot.
The reality is the way it is structured. Okay, and I don't want to get into the details. Okay,
Okay, no problem, no problem.
no, it's like for a promoter standpoint, it's like okay, I'm getting, I'm basically getting some cash for future ticket sales. It's exactly when I'm doing a pre-sale. Okay, I'm doing a pre-sale. I'm gonna go on sale in advance. I'm gonna put a 10% discount on my tickets. 10% discount for a pre-sale.
Interesting.
10% 10%
Yeah.
discount for what we buy in advance. It's
Wow. That's a fascinating point. It's like when someone has a festival, and the day after they say, "Hey, buy the tickets for next year." The tickets are highly discounted, so they're essentially taking money at like whatever a 20, 30, maybe even a 50%. That's a really incredible point. Yeah, I understand that. One of the things that you said that I thought was really interesting when we were first talking is because you have separated because you effectively a bank, a lender, and you've separated that from the ticketing companies where before they were tightly coupled. Well, since all of your money is made on the interest, you now have a much higher kind of like due diligence assessment. Like you can't write it off as marketing. You can't just say like, okay, even if we don't, make as much on the fees as we want, as quickly as we want, we can, we're making money on all the other ways that ticketing companies make money. So why don't you talk about your process in vetting promoters and how it was different from See Tickets to how, how much risk you're willing to take now?
Yeah, so we at See Tickets we were vetting promoters already. What we're doing at Soundcheck, we added a lot more into it. And look, it's not easy because what we do is we take risk. You know, some shows don't sell, some shows take longer to sell, some shows gets canceled. So we have different ways to deal with that. Look, I was telling you, I finance a lot of Latin promoters. Last year, and when I say Latin promoter, I'm not talking about the big Latin shows that everybody knows about. You know, I'm not talking about Bad Bunny or Shakira. I'm talking about regional Mexican. I'm talking about independent promoters that are part of like Promotores Unidos, and
Mhm.
last year was a tough year, you know, because of the political environment. There was a lot of shows that were canceled. And so when we look at the deal, we look at a lot of different things. We look at finance, we look at ticket sales, we look at reports. We have a lot of different things. We do it quickly because we know our promoters wants to need the money quickly for the artist deposit most of the time. But it's it's something we've built over, I've built in terms of experience and since 2014. So we have ways to do an underwriting that works for the industry. I was
Interesting.
I was telling a friend of mine who is a banker in a large bank where he does media financing. I was telling him how we do things, and he was like, "Wow, we can't do that. It's so a traditional bank won't be able to do it." And then no, it's risky, and most of the deals go well, and sometimes one deal doesn't go well, and we need to manage this.
Yep. Yep.
And
Interesting.
and I think coming back to uh, what's what I think is that we're really bringing is we're separating the check, from the technology. Okay,
Yep. Yep.
and I think it's beneficial for the promoter, but it's also beneficial for the ticketing company.
Absolutely.
Your ticketing company, you have a great client, okay, but there's a problem with some of the advance you've paid and you've not recouped. It's not a good relationship, okay? That
Yep. Yep.
it's you're basically financing him, but it's also your client. So we've helped ticketing companies restructure some deals as well.
And I
And
could imagine it prevents them from having to jump to the next ticketing companies. Like sometimes promoters will make ticketing decisions based off of finances, which is just a little mind-boggling. Like they'll take the big front up the big advance, then they're going to do something ambitious. Well, the ticketing company that they're currently working with already, are recouping on the advance that they made. So then they have to go to any of the other five ticketing companies to say, hey, buy me like but put in your model to figure out a way where you can buy me out of my old deal and provide me money to go and do this thing that I want to do. But at the same time, they're not switching ticketing companies necessarily because it's a better technology. They just need the money. And like this is another reason why I wanted to highlight what you're doing. I think it could put folks in positions like, hey, you worked with See Tickets or E-Tix or whatever, and they wrote you a great upfront check. Turns out it's perfectly reasonable. A couple of years went by and you have another need for financing. Well, now there's an alternative to just going to and jumping to the next ticketing company and getting them to write a check that may even be harder to get out of because you were a little bit too ambitious with your ticket sales or whatever. So anyway, I love what you're doing. And do you agree that you saw that kind of behavior when it was like all linked together? Yeah.
yeah, no, what you said totally makes sense. We've launched 2 years ago, and we've financed already more than 100 deals and $24 million. And so we've got some traction, and people are coming back, which means that that model works for them. It's not easy to do, but it works for a promoter because it aligns with ticket sales. There's no fixed schedule like a loan. We don't take equity, okay? And we don't require long-term exclusivity. If you want to get out of our deal, you just repay the advance and that's it, or the unrecouped portion. Okay, so it's very, very flexible for them. And if you want, if you're again, if you're a promoter and you need money for a show or a festival or anything, and you partner with someone, they're gonna take a profit share or 50-50 split. If you double or triple or if you kill it, you're gonna you're gonna share everything with them. We only take what we said we would take. Okay, so there's a lot of value in what we provide.
Yeah, yeah, interesting. Do you have to? You were mentioning that banks need collateral and whatnot. Like, does your loans come with any sort of collateral in a situation where someone can't gets into financial risk and they have an outstanding an outstanding finance with you
We
and
have
they,
some
they can't pay back?
protections. We have some
Yeah, yeah,
protections, of course.
yeah.
But these are not loans. These are and
I
and
hear
it's
ya.
important. And the way they're structured, our offers and their contracts, these are not loans. Okay. And
What
and in terms
what
of
what is the financing vehicle? So as I could just call it what you are, just
it's
just
an advance.
financing.
It's
It's in
it's
advance. It's
yeah,
advance.
it's an
Okay.
advance. Yeah.
Okay. Yeah, makes sense. Yeah, the advance. Um, it's interesting to hear you say that you're not seeing this as an alternative to the upfront check to get the business right away. Um, in 100% of the situations, in some situations, I've talked to promoters who actually choose not to get that upfront check. They want the lowest possible fees, and maybe they don't want to do a long-term contract with a ticketing company. Now they're rare, they're out there. Is presumably Soundcheck Capital could help encourage more people into that mentality as well. I get that you're saying that respect the model that exists. So anyway, my question is are some people using this as an alternative to the upfront cash?
Yes, sometimes we do this in part. I mean, we always do that in partnership with a ticketing company. We never do that behind their back, okay? Because we work in partnership with the promoter and the ticketing company.
Got it.
And sometimes, they got some money from the ticketing company and they got some money from us. Sometimes it's just from us. Sometimes they decide to go with the ticketing company because they got a lot of money up front, which we've deployed a lot of money, but sometimes it's just better. Sometimes not even a ticketing advance will make it. It's you have such a big project and it's so risky that you will need equity investors. And sometimes a ticketing advance is going to be good. Sometimes a sound check advance is going to be good. And if you're an established promoter and you own your real estate and all this, you should go to the bank and get the best loan possible. There's very different way to fund your business, and I think we're contributing to it. It's not perfect for everyone, but it's very good um, for like artist deposits, working capital needs. If you want to acquire a big venue with real estate, I mean, we go to the bank because you're gonna get the best financing possible. Does
Right.
that make sense?
It does. It does. It's very it's very interesting, and I'm excited. I get the point that you're making is that this is just an alternative. It doesn't have to, if you have only one funding source in the industry, there's all sorts of problems that emerge from that. So what you're saying is you're not trying to be just a different funding source and beat all the other funding source and only be one funding source. The point is to have multiple funding sources, and then
And
optionality opens up.
yeah,
Yeah.
I tell promoters when I think they should look for something else.
Yeah.
Because and look, at the end of the day, we of course we want to develop the business, we want to make money, we want this to be successful and sustainable. I mean, Soundcheck, but at this, this needs to work for the promoter as well. Otherwise, you don't have any clients. So
Yeah.
when I think we're not the right capital partner, I tell them, look, with what you've got, you should do this. And but typically, I mean, we come in and they like what they hear.
Yeah. And I think I could imagine those situations where a promoter, excuse me, a promoter wants a really big check and a really good deal, and the way that a ticketing company in certain situations can make a marketing decision around that and say, you know what, um, this isn't going to be the most lucrative deal over the next 3 years, but this brand and this opportunity is strategically important to us. So why not do that? Whereas when you're just a financing source and you're not a technology, you're not going to be the one to make those decisions. So I think, if there is two options where, someone just wants, if a ticketing company just really wants the business, and one out of every 10 deals they just write off to marketing, like that's probably a good thing for the industry and can help, grease the wheels a little bit. Am I filling in the blank there that those are some of the situations where they're basically coming at you with, hey, like I don't want something that I could realistically pay back in 10 minutes, 10% over the next 6 months. I want something that, is just a little bit more imaginative, and then, it's really kind of the ticketing companies that have to decide whether or not it fits into their model. Yeah, and that's
Yeah, I
in those
mean, for the
situations.
ticketing companies, no, those are tech businesses, so they raise money from VC, from which is expensive money. Okay, so you're basically asking them to put their very expensive money towards signing bonus or advance. Okay, and it's much better for them to work with a capital partner like us.
Yep, yep, absolutely. Do you think how here's an assumption that I have, a question that I have. With some of the ticketing deal, and I'm not blaming the ticketing companies for this, but sometimes when I hear the deal that a partner, a promoter, or a venue takes from a ticketing company, and when you do the, and I know it's not a loan either from the ticketing company, but when you do the math of how much they're going to pay back in the long run, and $4 of every ticket, it ends up being an extraordinary amount of an extraordinary interest rate when you kind of look at it from that amount. Like when you were at See Tickets, what was your experience with, the market's kind of knowledge of, like, hey, like we can give you $1 million, but then you're gonna have to pay $8 of every ticket. Do you think there were situations where promoters and venues, weren't exactly, kind of thinking through how much that cost, because their perception was, you can collect the fee on the back on the back end, and is some of your hope to try and get people to, like, think through the money that they're being lent more? That was a very wordy question, but I think you're gonna pick up what I'm putting down. Yeah, and let me know if you need me to.
Look, I think again, ticketing companies, they do that. They were not started to do financing.
Yeah.
No, their core business and their core mission is to build a great platform and sell tickets for their clients and help them market and service and all this. Okay, they had to do they did the financing because nobody else did it. Okay,
Hmm.
nobody.
Hmm.
And I think my vision of the industry, I've not been in the music industry for like 50 years, but my view is that fans stopped buying records. Okay. And
Yeah.
so artists had to make money on life. Okay, everybody knows that. Okay, streaming doesn't pay. I need to make money on life. Okay, so artists went to see the promoters through the agents. I don't want 85% of the net. I want 90% of the net. I want 95% of the net. I want 100% of the net. I want 100% of the gross. So the promoter ended up paying more and more for artists because the fans stopped buying records and started to buy tickets. Okay, so the promoter got squeezed, and that's my view. I might be wrong, but my view is, and so the promoter went to whom? The ticketing company, and they say, you know what? You're charging 5% for your service fees. Add 1%, and the consumer is going to pay for it. Okay, but you're going to give it to me. Add 2%, add 3%. And then you end up with crazy service fees, with which a lot comes back to the promoter and the artist, and that is paid by the consumer. And now it's not 5% added; it's more, and it's upfront. I think that's how it all came through. At the end of the day, artist needs to make a living. They are the one producing the content, the show, and promoters pays them, and so they need to make a living. And so same with ticketing companies. So the fans stop buying music, they bought tickets, and I think that's all linked to the fact that service fees are high and ticketing companies are financing the industry.
That's a really good point, and I think you're absolutely right. And in that same upward motion of, more and more money needing to be made off the live event from the artist because that's their primary revenue source, and then the promoter then going to the ticketing to get a cut of the fees, then the next step happened from the promoter's perspective, which is like, hey, I can now use the ticketing fee as a funding mechanism. And if I want $1 million, I can do that. But then my fee is going to go up from $2 to every ticket to $8 from every ticket. And I think that's how the whole kind of, when you check out on Ticketmaster and you get I bought a ticket for my son. It started off at $80 for some dinosaur show at the Moody Center. And then by the time we checked out, it was $200, and I was like, "Oh my God!" So that upward motion is how that occurred. And I get it. If the promoter wants $1 million and they need it for their business, of course, See Tickets can just say, or whoever can say, "Well, here's how the math here's how the math would work. We have to put an $8
And,
service fee." The question that I wanted to, and feel free to correct me on that. The question that I wanted to ask is all, and you and I talked about this a little bit, is all in ticketing going to be a reverse pressure of that? I.e., if a promoter can no longer pass that fee on at checkout, is it going to require them to take less of an upfront deal because the economics don't allow for it? They don't want the advertised price to be so high every time they do a show, and as a result, more advances like Soundcheck will need to emerge. So anyway, boom, yeah.
I don't know. The answer is I don't know. At the end of the day, I think all in pricing, people are just gonna have to show that the service fees are that much, okay? And from the get-go, which might affect ticket sales, okay? But look, I had one promoter, one very strong independent promoter, okay, which was one of our best clients when I was at See Tickets. He told us, we were inviting him for an all hands meeting and all this. He told us, look, the rebate I get from you guys that is in the service fees is my margin. Okay. So what I was telling about is like the promoters not making money just on because they need to pay the artist 100% of the gross. And again, I don't know all the deals is, but hey, add 1% and give it to me. It's the reality of the business, and that 1% paid upfront now. Okay, And so I think promoters need that, okay, because of the way the industry works and because artists need to make a living. And I think fans are unhappy about those service fees, but they stop buying records. And I know it's people are might be mad about what I say or unhappy, but the reality, fans stopped buying records. Artists needs to make a living. Ticket price went up, service fees went up. As simple as that. And
Yeah.
so,
No, I think it's a fascinating point, and the voice of the consumer might say like, we would have rather just been advertised that increase up front and not be not kind of like sneakily paid it when we check out. And then, now there's all in ticketing. So
but
we
yeah.
yeah. Yeah,
But I
please,
think
Boris. Yeah.
it's just the industry that evolved like that, and everybody was happy to point at the ticket companies being making so much money with so much services and all this. But the reality is there's a lot of money flowing back to the system.
Yeah, it's, all in ticketing is fascinating. And one thing that I did not anticipate, and I want to make sure I speak with it with empathy, is that for the carpet to get pulled out immediately, it was more challenging for my partners than I realized that it would be because, they didn't have time to kind of educate people, the consumers, on like why the prices were so much higher. And their perception is that, in between now and when consumers get used
Yeah,
to paying more, that there's going to be loss in revenue, and I empathize with that. But if I put my hat on in terms of the long term, I'm actually quite optimistic about all-in ticketing in the long run to maybe reset some of these kind of like, you know, very interesting, reasonable patterns about, how fees got so high, and then, the upfront lending from ticketing companies as a result, lending for lack of better words, and that, maybe this can be a force in the other direction and kind of can help make more sense. And then, frankly, a traditional um advancing model that's based off of the terms that a traditional lender would have, though it's not a loan, it is, I think, is very interesting in that environment. That's what I told you. And that's one of the reasons why I'm excited about your business. I think
yeah,
if the industry does course correct to some normalcy, some traditional, financing is like, I think, a very, very good thing
yeah,
that's not contracted and clear terms and not 5-year payback and all that. So yeah, Boris, please go ahead. Yeah.
yeah. Look, my view is that all-in pricing for the consumer is good. You want, as a consumer, I want to know upfront how much I'm going to pay, whether it's a ticket, whether it's a flight, whether it's an hotel or anything. That makes a lot of sense. Okay. I think when it comes to the impact on the financing by ticketing companies, I don't know. We'll see how it goes. And I think the industry is going to go through and people are craving for live events. I'm
Yeah.
bullish and I want live events to continue. Look, when I see I don't want my kids to spend all their time on their phones and on
Yeah.
Snap or I want live events and I'm a big believer and well, personally for the business, but personally for the world I want to live in, with human and and a real connection. So I'm a big believer, and I think the industry is going to do well. I think when it comes to traditional lenders coming to the industry, it's tough. It's look, so what's funny is I've started. So I come from the ticketing world, and I come and I started to attend a few lenders conference to understand how they work and all this. So it's not the NIVA conference. It's suit and tie. It's less fun. It's much less fun, but you learn a lot. And and the thing is, when you think again about a lender in general, okay, that gives you a loan, okay, that grant you a loan, and let's say a loan for $100,000 and they charge you 5%, okay, 105 per year. Okay. If the loans goes totally belly up, they need 20 deals to make it up.
Yeah.
Okay.
Yep.
It's the same for us, with our 10% fees. And again, our fees varies, but if one deal goes bad, we need 10 to make it up. It's not equity. It's not venture capital. It's
Yep.
not, I invest in Facebook and then I invest in 9 shitty companies. Excuse my language,
Yeah.
but and then
Yeah.
Facebook pays it all. It's very different than VC investment. Okay, and I've learned that because I've started to discuss with lenders how they look at things. I have in our team we have people who come from credit. They don't come from life entertainment. They come from banks. And when you look at this, if one deal goes bad, you need 20 or 10 to make it up. You look at things differently. Okay, and so you look at the risk, and so traditional lender coming into the space, uh, Live Nation is getting financed by traditional lenders. So is AG, and so are large promoters. But for no smaller to independent and or very strong promoters that have good projects, it's more difficult.
Yeah. Yeah. Um, super, super interesting to
But if
see.
you want, I can invite you to one of these lendings conference. I'm sure you'll love it.
I'll fit right in. Yeah, man, I think I'm spoiled for the rest of my life from going to NevaCon,
Yeah,
and the
I
fun
very
that
much
goes
prefer
down
that.
there.
Yeah.
No, it makes a lot of sense, Boris, and the way and when you explained this to me about the model again, it made me feel even better about what you're doing at a lending source that's been out there and our new lending source that's out there with a slightly different model, and it doesn't need to replace upfront cash from ticketing, but it can be worth, they can go really well together. In some situations, it can replace it if a promoter just doesn't want those strings attached with their ticketing contract. But it's a brilliant move, and I think thank you for your good words about the new product that we launched, Insights, and I think Insights and Soundcheck Capital and a number of other companies out there are all fighting the good fight to like make this thing more sustainable. And with Insights, I had a promoter recently who they just joined and they said Insights paid itself back almost immediately because they got an agent that reached out. They really wanted to do the show. The guarantee that they demanded was 15K. They could go on Insights. They could see all the data and inside Insights, and he just couldn't wrap his head around anything above 8K. He offered 8K instead and said, "Hey, if you pass on it, it's totally fine. I'm not going to make that bet without it." And the guy and the agent said yes, it turns out. And I think, and what I when agents most agents that I've talked about Insights have appreciate the product, and I think they understand the spirit of the conversation that we're having right now, which is like, hey, if we don't all figure something out, like this whole house of cards could and the industry's not a house of cards, but this whole thing could collapse in a spiral if it doesn't make more financial sense. And it's all the part of the same conversation, Boris. It's like they're asking for the guarantee that they're asking now because it's coming from the artists, and the artists don't have the revenue stream that they did before with their recorded music. But at the same time, like it can't get past the promoter like a hot potato, and then the promoter is just like being a promoter is a losing business because you'll never have promoters. You won't have
Yeah.
promoters. You won't have anywhere to play.
You
Yeah.
will have only one promoter. But I think
Well,
what
you'll have
you're
Live
doing,
Nation. That's
yeah,
exactly.
yeah.
You'll have
I
only.
think what
Yeah.
you're
Yeah.
doing with Insights is great. I was listening before the coming to the podcast, and even before knowing I would talk, I listened to what Stephen Parker said
Oh,
and
great.
about
Yeah.
leveling the playing field. I think what you're doing, providing information, valuable information to independent promoters, is that leveling the playing field so that they can compete. I think what we do is the same, providing capital when nobody provides it, um, against bigger companies. I think that's we need more of things like that, like Insights, like Soundcheck Capital, and
Yeah.
I think just to help independent promoters compete. You know,
Yep. Yep.
and I think we're working we're really working all towards that. What Fabrice does with bands in town as well.
Absolutely. Yeah.
It's
Yep.
fascinating. All the marketing that they provide. I think we need to continue to just do that.
Absolutely. Boris, do you have time for 5 or 10 minutes of just kind of like some fastball questions? Just throw some. It's been okay, great. It's been a
Yeah, yeah,
fascinating.
I have time.
Okay, great. It's been a fascinating convo. We could go on for hours. I always enjoy speaking to you, and it's really cool to hear the progression from what you were doing before See Tickets to starting See Tickets, seeing this funding model, thinking about this back in 2018. seen what happened with Neva. I mean, it makes complete sense to see it. So, thank you for sharing the story and hearing it all kind of stitched together is one of my favorite parts about doing this podcast. I deeply appreciate it. One of the reasons why all of this work is so deeply important is it's just very hard to be an independent promoter. And I know you saw it firsthand. And there was a lot of doom and gloom in 2025. I'm wondering if you could speak to like what you witnessed firsthand about the challenges of being a promoter, what you feel about the economy going into 2026, if you're feeling optimistic or if you think there's going to be some more headwinds going into 2026, and what promoters can do just to try and survive this storm. So that was a big question, but yeah, why don't you
It's
talk?
a tough
Yeah, go ahead,
question.
please.
A
Yeah,
tough
yeah,
question.
yeah.
Look, as I was
Tell me
saying,
the solution to it all.
yeah, I'm a big believer in the industry overall. Okay, I really believe that live entertainment is here to stay and is gonna grow. There was a podcast from Ari Emanuel about his anti-AI bets, not saying that AI is not going to work. He's saying it's going to work, but I'm going to invest in live entertainment because I think people will want live entertainment. Okay, that's his anti-AI bet. I think what he's doing is providing equities, buying stuff. Okay, we provide the funding, the debt side of things. So I'm a big believer in the industry. I think, like in any industry in the US, where it's a very competitive market, it's the most competitive market in the world for any industry. I think you're gonna have promoters that do extremely well, the best one, the smartest one, the ones that can execute, the one that have relationship. Others are gonna struggle, but the overall industry is going to do well in the long run. I think, short term, hard to say. No, last year, who could have anticipated that in the Latin market it would be a tough year? No, I started financing promoters in 2024, 2025, and February, March, April 2025, it was rough. Okay, I had so many show cancel. Okay, and of course, I mean, it was not their fault. It was the political environment, and so I think we what we look for, and that's why our underwriting is complicated, is that, and it's not easy to do. We don't back just we back people. We know promoters are gonna face challenges. Okay, political environment, artist cancellation, weather, and so we back people who have a strong history of facing a lot of challenges and making it through. Okay. And I'm a big believer that these folks, they're going to continue. Does that answer your
It
question, more or
it
less?
it 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 does. It absolutely does. I think, and by the way, one of my favorite Prism clients is Zamora out of Detroit, and they put on giant Mexican music market concerts,
Yeah.
Latin concerts around the country, and he was talking at a conference about doing an arena show in Chicago when Ice was in Chicago, and
Yeah.
it's like, wow, what a mind blowing complex situation that he described, and I wouldn't want to fail to do it justice. I probably should just have him on here to talk about it, but yeah, that was an unexpected headwind, and I absolutely get what you were saying. One of the weird kind of things about 2025 was that Live Nation stock was going up into the right, like their earnings and their performance made kind of people assume that the industry as a whole was going up into the right, but for some reason the growth happened on the arena and the stadium side of the business, and I do hope that that finds its way to the clubs, but I think it naturally will, and there's still some weird kind of like COVID things playing itself out, and hopefully we get control of inflation, but I understand why there's fear in the market right now. I do, but I also share your optimism. Yeah. So, yeah.
Yeah, yeah. And I think that it's really the tale of two cities. You have the big shows doing well and the smaller shows and promoters, independent, that are struggling. Look, I think it can change. I don't know which way it's going to change, but look, a few years back, like Coachella was selling out a year in advance with no lineup. Okay, Now, from what we see, it's more challenging. You need more curated experience. So I think consumer taste change. Personally, one of my favorite conferences is South by, okay? Because of all those small shows, okay? I much rather small indie shows or that are intimate than the big mega festival, okay? And I think consumer taste might change as well. They might be at some point they want to go to more shows for the experience and being part of communities than going to one big show a year. I think consumer taste can change. Okay, I don't know how it's going to change, but I think we've seen that in the past.
Absolutely. Absolutely. So another fastball question. That's a fascinating kind of point you brought up about Ari Emanuel's anti-AI bet. Not that like he thinks that AI is going to flop or that it's a bubble, but and I would say it's not just AI, it's like the digitalization of the world staring at your phone, and AI is a part of that, all Netflix and all that. The getting out into the real world for really rich experiences is just not going away. It can't be replicated. Not in a healthy society. I don't think we want people plugged into their electronics. So I'll throw my chips in with Ari there on that one. But excuse me. My question is back to AI. And okay, we all believe that, the live is going to be there, but what are you seeing in AI? Do you have fears around how it's developing? Have you seen really interesting use cases about how AI can help kind of make these experiences more sustainable, help businesses become more sustainable? Yeah. So give me the good, the bad, the ugly, and the predictions of AI in the future. Another
So
easy question.
yeah, look, I think again the good thing is I don't think AI can disrupt live events. Okay, I think it's the human connection with the artist that needs to be an artist, a human, not an android. And I think is very good for the industry. I think it's gonna help and bring a lot of efficiencies. Okay, we use AI. I use no, ChatGPT and Claude and all this. Sometimes it works, sometimes it doesn't work. But I think it's going to bring a lot of efficiencies. I don't think it's gonna. I don't think it's going to be bad for the industry. Okay, I think people are still they will want that human connection, that being in a small venue, small club or big arena and experience the show and being connected. I'm more worried about my kids getting jobs. That's what worries me. What jobs will you have in the future? And no, and the time that they spend on screen. That's what worries me more than the life industry because I think the life industry is gonna do really well.
Yeah, and Boris, you could kind of I share that fear and that question. I'm trying to have it be a question more than a fear, though. It really depends on the day whether I'm optimistic or pessimistic about the future for our children. Grateful to have three beautiful ones. I think you have three as well, don't you?
I have four.
Oh my God! Oh,
Yeah.
God willing, I'll catch up to you someday. But I'm good on three
But
right
I've got
now.
twins. I've got twins. We've
Ah,
got yeah. So we I have two boys, 16 and 14, and we got twin daughters
oh,
for the third one.
thank God, amazing. Um, but one way we could ground that question of like, are our kids going to have jobs? I think is in this industry. It's like, okay, there's going to be a band on stage with a bunch of people watching it. We can all believe that, but I think like there's an open question around like the industry that lifts it up and like, is AI going to create job displacement in the live music industry? And I think, you know, I'll answer the question, then I want to hear your answer. Like my response is what I see is that this is an industry where five people are doing the work of 50 people or 100 people right now. So if there's a 10x or a 20x or even a 100x efficiency increase, well, then we can just go from having stressful jobs to like our unruly stressful jobs to having slightly stressful jobs because of all this automation. I just think that yeah, this is an industry that's not inefficient. It's not, it's not bureaucratic, right? It's not like at the DMV where you have 100 people that could do the job of one person. It's the exact opposite. So like that's my the optimist coming out with me with
Yeah,
AI as it relates to jobs in this industry. But what's your take?
I love that. I would love that. I don't know. Look, in this industry, shit happens and it's coming from all angles. And I don't know how ChatGPT can solve that. And maybe, but one of the first, I remember one of the first festival we did right after acquiring Flavors. We set it up. We had a big festival in Chicago. We set it up, and for some reason, no, we had issues with the scanning and the lines and people buying. And then there was that crowd coming in and wanting their tickets, and that was a stressful experience. Okay, I don't know if AI could have solved that. Okay, and I think it's you're gonna have more tools. Some of the part of the business is gonna be easier or more efficient. The marketing, on your podcast, on your pod, you had the Ave guys. I think that's gonna
Yeah.
help them a lot. I think the event part of it, I don't know. I honestly don't know.
Yeah. 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 I think that there's, and yeah, that I
How
was going to shout out.
how AI is going to prevent a band from splitting midway through the tour?
Right. Right.
This is human. This is human behavior, and
It's a curious time. I don't technology is traditionally our imaginations typically get the better of us when it comes to technological change, and this has been a pattern, since the invention of the printing press to the onset of the internet of itself. Like we're so used to using the internet, but we were rewinding the clock 30 years ago. There wasn't Airbnb, there wasn't Google, there wasn't Amazon. And that was a tremendous amount of change where a lot of these questions were being asked. Now, is this fundamentally different than the last leaps? That's the debate that's happening right now. But like I think there's just a tremendous amount of kind of purpose and meaning in that humans deliver to the world that a supercomputer cannot. So again, that is the optimist coming out in me. But we will see. It's a curious, fascinating time. I mean, even in my space, software has changed dramatically thanks to AI. You can instead of writing a block of code, you just tell the AI what code you want to write, and it's starting to get to the point where it's better than a good engineer just writing it itself, and it's immediate, it's fast. You can pump
yeah,
out hundreds of lines of codes. Well, even though that's happening, there's still engineers on our team that are way higher performers than other engineers. And we're scratching our head around like why is that? And I think it's the human paired with the AI is and it's honestly an interesting question right now, but like the humans guiding the decisions and guiding the process and making the decisions, I think is something that a computer is not set up to do, and a computer does not have agency or free will for the time being. But again, it's a very we got into the science fiction because how could we not? It's just in the zeitgeist right now, but it's a
yeah,
very curious time. Yeah.
yeah,
I'm
totally.
yeah, I'm trying to constantly sense make, which you've helped me a little bit on this call, but we all just have to sit in the mystery, I think. I don't think there's any answers. Yeah.
Yeah, I mean, look, I don't think we have much impact. I personally don't have a lot of impact on
Yeah.
this. The only thing I can impact is how how we can on the business side support independent promoters, and on the personal side making sure that my family, my friends, and all we all take the time to be together and not being always on
Oh man.
ChatGPT. And
That's
I'm
a
also look. I ended up in live events. You know. Not 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 by chance, but I did a lot of different things before, and I've always been a big sports fan, media, entertainment. I ended up in live event. I'm so happy to be in that industry because that industry brings people together and away from their phones to a certain extent. You
yeah.
see what I mean? It's real interaction, and it
Yeah.
puts the human at the heart of it.
Yes. Yes. Yes, I couldn't
So
agree
that's why I
more.
love this industry.
Yep. Yep. Yeah, it is funny. I do see the propensity in my social interactions to every other sentence. Well, let's ask ChatGPT about that. Well, let's ask ChatGPT about that. And I tell my son, he's like, "Oh, hey, can I borrow your phone to like ask the AI a question?" I'm like, "Well, ask me that." And then he's like, "Well, in I want to ask him about this character in Zelda and why he's dressed the way that he is." And I'm like, "Dude, like AI doesn't know. It's gonna just like spit out a guess and look at the internet and like we could just have that conversation." But
Yeah.
I'll land on this note in terms of job displacement. The founder of CEO, or sorry, the founder and CEO of NVIDIA had a really interesting Joe Rogan podcast, and he brought up the example of the radiology industry. And it was predicted about 5 years ago that radiology would be completely uprooted because of AI. And that and one part of that prediction became correct, and the other part was incorrect. And the one part of the correction that was right, or one part of the prediction that was right, is in now every single image that's looked at from radiologists is indeed first analyzed by AI. So it has fully taken over the industry. But what's weird is there's more human radiologists than ever before, because it turns out there's all this extra work outside of just looking at the image that the human is responsible for. And I think that ties back to your conversation about the band splitting up mid market. And so again, I do think that there's real world examples um, that have me being optimistic. And for instance, Intercom, a customer support app, they introduced AI features where now if people have a concern about Prism and they want customer support, they can chat in the app and ask our AI and get real world answers. And Intercom has done this for 7,000 companies. And they across their 7,000 companies, they don't see their partners firing their customer support staff. They're just now able to focus on other things that they weren't able to focus on before. So, again, I do net kind of land optimistic on this one, though.
You have
I
to.
yeah, yeah,
I mean,
yeah.
you have to. I mean, there's no other.
Well, let's wrap on that. A beautiful conversation, and thank you for saying that you like got into the music industry intentionally because it's something that you believe in for the world. And same here, same here. I intentionally chose this industry over a number of other things because the best experiences I had as a kid was going to festivals with my family and friends, and I wanted to help that industry propagate into the future. Yeah.
Yeah, yeah. Well, it was good to speak, Matt. Thanks a
Yeah.
lot for the time and congrats on what you've done with that podcast and
Yeah,
with
thank you.
Prism.
Yeah, I appreciate that. Yeah, it's we many battles to be fought in the future for Prism, but we've come a long way, thank God. Yeah.